This strategy loses more than it wins. 37% win rate. That means for every 10 trades it takes, 6 of them end in a loss. And yet, at the end of 6 months, it made money. That result confused me at first. And then Claude explained me why it works. And honestly, it changed the way I think about trading strategies completely. Here's what happened. Last episode, we connected our bot to MT5, pulled 6 months of real EURUSD data on the 15 minutes time frame, and ran our moving average crossover strategy on it. We got 67 signals, clean chart, real broker data straight from the terminal. But signals on a chart are just arrows. They don't tell you anything about money. To know if this strategy actually works, we need to simulate every single trade, track every entry, every exit, every profit, and every loss. That's what a backtest does. And that's what episode 4 is about. Same chat, same project, one more prompt. Here's exactly what I asked Claude to build. Start with a simulated balance of $10,000. For every buy signal, enter a long trade and exit at the next sell signal. For every sell signal, enter at a short trade and exit at the next buy signal. Track every single trade: entry date, entry price, exit price, profit or loss in pips and in dollars. Calculate the overall results, total trades, win rate, total profit or loss, and final balance. Plot the equity curve showing how the balance moved over time. Save a full trade log as a CSV file and use a fixed trade size of 0.1 lots throughout. Now, before I explain what is zero point 0.1 lot means, a lot in Forex is just a unit of trade size. 0.1 lots is what's called a mini lot. It's a small conservative position size. We are not betting the whole account on every trade. We are keeping it controlled. One prompt. Let's see what the numbers look like. Claude is building the backtest engine right now, reading through all 67 signals one by one, simulating every entry and every exit, calculating the profit or loss on each trade, and updating the running balance as it goes. This is essentially Claude doing manually what a real trader would have to do over 6 months, compressed into a few seconds of computation. And here's what came back: 67 trades total. One signal was unpaired, so it got excluded. That's normal in backtesting. 25 winners, 41 losers. Win rate is 37.9%. Let that sink in for a second. The strategy got it right less than 4 times out of 10. More than 6 out of every 10 trades ended in a loss. If someone told you that before you ran the backtest, you'd probably say the strategy is broken. You'd scrap it and start again. But look at the other numbers. Average winning trade plus $56.65. Average losing trade minus $31.90. The winners are nearly twice the size of the losers. So even though the strategy is wrong more often than it's right, when it's right in a big way. And the small frequent losses gets absorbed by the larger, less frequent wins. This is called a positive risk to reward ratio, and it's one of the most important concepts in trading. You don't need to win most of your trades to be profitable. You just need your winners to be bigger than your losses. Final balance: $10,108.40. Total profit: $108 on a $10,000 starting balance. That's just over 1% in 6 months. Profitable, but only just. And there's a very clear reason why, which I will show you in a moment on the equity curve. Best single trade plus $240.90. Worst single trade minus $114.10. Max drawdown 3.8%, meaning at its worst point the account was only 3.8% below its peak. That's actually very controlled for a strategy with a 38% win rate. And this is what the full 6 months looks like in one picture. The dotted line at the bottom is our starting balance. $10,000. The green shaded area about it is profit territory. And look at this, the line never once dipped below the starting balance. Not once in 66 trades. Every single trade happened while the account was in profit. That's actually a really encouraging sign for a first backtest. Now look at what happened around trade 50. The balance peaked at around $10,500. $500 profit. And then the line started falling. Trade after trade going red. By the end of 6 months, the balance has dropped back to just 10,108. That peak and pullback right there. That's the story of this strategy. It found real profit and then couldn't hold it. Why did it give back so much of gain? Because the moving average crossover was still firing signals even when the market conditions weren't right for it. It kept entering trades during choppy sideways price action, where there was no real trend, and those trades bled the profits away slowly. That's the problem we are solving in episode 5. If you want to see whether the fix actually works, make sure you're subscribed because that's next Sunday. If you're finding this useful, hitting like takes 2 seconds and it genuinely helps YouTube show this to more people who would find it useful too. And here's every single trade laid out in full. Trade number, direction, long or short, entry date and time, exit date and time, entry price, exit price, how many pips it moved, profit or loss in dollars, running balance, and the result, win or loss. Win in green, loss in red. You can see exactly what I was describing. The losses come frequently, but they are mostly small, minus 23, minus 47, minus 13. Annoying but manageable. But then a big green bar appears. Plus $90, plus 125, plus 214. Those are the trades that keep the whole thing profitable. Look at trade 1, the very first trade the bot ever took. A short entered in late October 2025 and it ran for several days and closed with a profit of $125. Strong start. And look at how the balance column grows and shrinks as you scroll down. You can follow the journey of the account in real time. Every decision the bot made, every outcome, right there in black and white. Nothing is hidden. This is the real result. Code is pushed to GitHub as always. Link is in the description if you want to pull it down and run the backtest yourself. That's episode 4. 66 trades, 37% win rate, $108 profit on $10,000 over 6 months. The strategy works. The risk to reward ratio is solid, but it peaked at $500 and gave most of it back because it kept trading when it shouldn't have. In episode 5, we add RSI as a confirmation filter. The idea is simple. Before the bot enters any trade, RSI has to agree with the direction. Fewer trades, better quality entries. Let's see if the numbers improve. I genuinely don't know if it's going to work, and that's exactly why we keep going. See you on Sunday.